Good morning, everybody. This is the live market open for November 19th. It's Thursday. It's a busier day today. We had some news yesterday, and we're going to have quite a few releases today. And we already have some questions. So thank you, Chris. We'll reach your questions soon. As always, we'll cover recent developments in markets, charts and levels, the next 24 hours, and of course, your questions. So if you can't see the chat box under the video, please go to tlk.io/fxfree-forex-live-video. And let's start. So the biggest event of yesterday is the Fed meeting minutes. Okay, the FOMC minutes from the decision made on October 28th. They basically, bottom line, they just told us what we already knew. Okay, the Fed wanted to send us a signal back in October that they are considering raising the rates in December. Okay, so we already knew that because of that hint about the next meeting, and now they made it clear that this is what they meant to do. Okay, they meant to send us a hint. Okay, so if it's like if you wish someone telling a joke and nobody laughs, or only a few laugh and then he explains the joke. Anyway, in this case, it's not a joke, but they explained it to us. Now, some members really wanted to send this message and they had the upper hand, including Yellen, I assume. But others didn't want this language change, didn't want to send such a message. In any case, it's not a clear-cut message in the sense that we're going to have a rate hike for sure, but it forces data dependent. Anyway, this is the implied probability for rate hike. It rose yesterday before the minutes from 67 to 71, 72, and now it's back down to 68. More or less, it's the same because basically the Fed told us what we already knew, okay? They're also, as we know from the statement, less worried about international developments and sort of cautiously optimistic on employment and inflation. Really a long document with few details. Now let's see what happened on the charts yesterday. We had movements before and after. So first of all, we're seeing here this kind of round trip. This is euro dollar. I think it has had the strongest reactions yesterday, even also dollar yen. Anyway, before the release, we had a few Fed members speaking. So we had Dudley saying that, talking about the liftoff. We had Lacker, we had Mester, we had a few others. Anyway, they were sort of cautiously hawkish, if you wish, and this strengthened the US dollar towards the release of the minutes. So we had we had this dip under 106.30, the line we mentioned yesterday, on euro dollar. Then after the minutes were released, we had this choppy action here, right here, where the mouse is. Anyway, this is the fall to 106.16, new low, the lowest since April, but then a rise back up, and then a strengthening of the US dollar. And now I guess we can mark, yeah, it's quite messy here, but I would say 107.20 or 107.20 is sort of a high to watch. Since then, we had it fall back down, okay? So what did we have here? We had mostly positioning, mostly expecting hawkish minutes, right? And a stronger dollar, then sort of no news, taking profit, and now we're back to square one. More or less where we stood yesterday, a bit higher, yes. Stronger euro, weaker US dollar, but all in all, in the bigger scheme of things, we're still range trading. The range is lower than last week, but we're still sort of in choppy waters, if you wish. Okay, that's what happened with euro dollar yesterday. We had similar reactions on dollar yen. We had this strengthening of the US dollar towards the event, this bump up to 123.75, and the fall back to support, a bit of choppiness, 123.20, and now we're well within this higher range. All in all, it's a high range. We just was a false break higher, nothing to get excited about. We had a rate decision from Japan earlier today. They decided to leave policy unchanged, and they didn't rock the boat at all. Okay, let's see. To answer your question, Chris, before we move to the next things, you're bearish Kiwi and Aussie against the US dollar and the pound. Okay, and so let's look at these currency pairs. First of all, Aussie dollar, Yeah, we had to move higher because of the weaker US dollar. We didn't have anything really significant from from Australia. We did have something from New Zealand. PPI came out better than expected. Okay, so let's look at the numbers here at PPI. We did have, oh, why isn't it refreshed? Anyway, we had them coming out better than expected. This is the FX Street calendar on Forex Crunch, and PPI. Where's that? Anyway, we had Aussie dollar rise against the US dollar. We had the Kiwi dollar recover. This came after the Kiwi dollar fell to new lows to 64.25, below the 64.50 support line. Now we're back above 65, 65.23. Resistance is at 65.70 more or less. So yeah, so you're bearish Kiwi and Aussie against the fundamentals do point to the downside, because in the United States and in the UK we're expecting rate hikes, and in Australia no change, and in New Zealand probably a rate cut. So the general direction is I'll experience breakouts against the trend because of the weaker US dollar. The Kiwi has its own reason, but my thoughts on the pairs are this is just a correction within the range, and the downside of Aussie dollar, New Zealand dollar is going to continue against the US dollar and also against the pound because of monetary policy divergence. Markets still risk off from geopolitical events? No, I mean, there might be some impact because of the Paris attacks and the consequences. Yesterday we had a manhunt in northern Paris. So markets the attention is drawn away from the economy, let's say, but it's too early, very, very early to assess the geopolitical damage. Okay, hope this answers the question. You're welcome to follow up with something more specific, or and other guys. I see lots of people in the chat room. Rob, Vedran, lots more here. So welcome all your questions. Let's talk about other events we had yesterday. We had housing data in the United States. It was a bit weaker than expected. Housing starts came out worse than expected, while building permits were okay. So it wasn't really. Building permits came bang on expectations, 1.15 million. Housing starts, 106 million, worse than expected. This didn't have an impact on markets because at the same time, Fed officials were speaking and they were relatively bullish. They were relatively hawkish, and this sort of supported the US dollar. And these figures were ignored. As we said earlier this week, okay news is good news for the US dollar. Slightly bad news is okay news as well. We need a series of bad figures to weaken the US dollar. Or we had this profit taking yesterday on the Fed meeting minutes, but all in all, we're having well, first of all, not all the data is bad. Sometimes we have good figures, and this is sort of good enough for the US dollar. Okay, so that's what we had yesterday. New Zealand PPI, let me look that up once again. And where did it disappear? Yeah, right here. So it came out at 1.6%. The input price is much higher than minus 0.3 beforehand. That supported the Kiwi dollar, and also with this USD sell-off on the back of the meeting minutes, which really didn't say anything new. We have a stronger Kiwi dollar. Okay, so Japan rate decision, we talked, no change over there. Okay. What do we have today on the agenda? So we have today on the agenda, first of all, UK retail sales at 9:30. We didn't talk about the pound, 152.77. Yeah. So stronger British pound against the US dollar on this US dollar weakness. The pound has also other reasons to rise. The economy in the UK is doing well, good retail sales, good growth, good wages. Only inflation is a bit behind, and we learned this week that it's not that bad because core inflation rose more than expected. And in addition, regarding the Fed meeting minutes, when the Fed hikes, the Bank of England follows. That's what we're expecting. So we have a stronger cable. We just reached resistance earlier at 153. The next line of resistance is 153.70, support 152.50, and 152. 151.60 is sort of stronger support. So that's quite a nice, interesting pair to trade. We have retail sales, which is an important release for the UK, coming up just after the show at 9:30 GMT. Let's look at the expectations. What's most important here is the headline number. The headline, not the core number. It's not the US. So we're expecting a drop of 0.5% month over month after a huge jump of 1.9 last month. So basically expectations are quite low. Low expectations could result in a positive surprise. It ain't necessarily so, as the song says, but that could be. Year over year, we had a strong jump of 5.9%. This time we're expecting only 3.9. No, sorry, we had 6.5, now we're expecting 4.2. And on core, excluding fuel, we're expecting a drop of 0.5, also after a big jump last time. And year over year, also more moderate rise of 3.9 instead of 5.9. You're welcome. Be glad to answer more questions. Good morning, Fabian. Looking forward to your excellent questions like yesterday, and of course all the others. So that's the sort of big event of this morning, an important release from the United Kingdom, the retail sales. At 12:30 GMT, we have the ECB meeting minutes. That's not the highlight of the day. The ECB releases its meeting minutes a full month or 4 weeks after the event. A lot happened since then. We had Draghi speaking countless times since then, other members, other releases. So, and usually this is a very bland, boring document, even more boring than the Fed meeting minutes. I know it's hard, but they make it, and it moves the market less. I don't think it's important to know that we have this release, and perhaps there's surprises for change, but given the past, it'll be quite boring. Then we have more interesting stuff later. So we have the US jobless claims. As every Thursday, we have jobless claims right here. In recent weeks, it began ticking a bit higher, wasn't as good as so we see this really, really nice trend, post-crisis trend of falling jobless claims, less people claiming for unemployment benefits. Really nice trend. But if we look just at the past 3-4 weeks, after we reached these new lows under 260, we began seeing it rise a bit higher. So it was 276 in the past 2 months. Let's see, now we're expecting 271. I hope all of you know how to use these great FX Street calendar tools. Anyway, we have the continuing claims as well. And at 3 GMT, we have the Philly Fed Manufacturing Index. Now, manufacturing has been the weaker sector of the US economy. Like in many other developed countries, the US is not alone. Services is stronger. We had, we're expecting now, it was minus 4.5, which means the negative numbers mean sort of weakness in the sector. Now we're expecting an improvement, but still to negative ground, minus 1. Earlier this week, we had the New York Manufacturing Index. It was disappointing. Both figures are expected to, this figure is also expected to move markets just a bit. What else? Sort of key events today on the agenda. At 5:30 GMT, we have Dennis Lockhart of the Fed. He's leaning to the hawkish side. He will talk. Let's see if he cements this rate hike. And then, more importantly, number 2 at the Fed, Vice Chair Stanley Fischer. He talks late in the day at 9:45 GMT, and he's been leaning just a bit to the hawkish side. Let's see what he says, and let's see if he also gives his stamp for. They don't really give their stamp. They just sort of make gradual preparation, like the gradual rate hikes later on. Okay, and the night is expected to be relatively quiet in terms of events, but just as the show begins tomorrow, we have a speech from Mario Draghi, the president of the ECB. This time he's speaking in Frankfurt. He spoke in Madrid on Monday. That appeared on all calendars, but I couldn't find any news about that. Sorry. So let's see if he moves markets tomorrow at the wake of the show. Okay. So these are the upcoming events. All in all, it's a much busier day than yesterday. First of all, we have the echoes from the meeting minutes, and secondly, we have the quite a busy day in terms of events. Let's look at a few more charts. Good morning, Sarat. Looking forward to your questions. Probably 106.74, 106.60 was an old support line. It's not really there. I mean, now we're seeing the pair finding support over there, but I wouldn't call it strong support. A stronger support I see at 106.30. I see the break below this line yesterday as a false one, as just these sort of positioning things. Anyway, the lines to watch 106.30, and below that we have 105.30 and 104.60. Regarding euro dollar, the world's most popular currency pair, we had a repeat from Goldman Sachs saying that they expect parity by the end of the year, and they even explained this. Okay, they said that. Hope you can see me better now. They explained that they see current levels around 106, 107, right? So, and they expect it to slide down before the end of the year to 105, and then in two steps. First of all, we're going to have the ECB decision on December 3rd, and that could push the pair sort of 300 pips lower, and then we'll have then we'll have the Fed decision on December 16th, and that could push the pair another 300 pips lower, sending the pair eventually to parity by the end of the year. Okay, so they stick to their forecast, and they said that they're by the end of March they see it falling to 95 cents. Now, at least they're consistent. They'll be saying they've been extremely bearish on euro dollar for quite some time. So let's see if they're right. And also, Morgan Stanley joined this parity thing. Do you think we'll reach parity? I'm not so sure. I think we'll have a dip below 104.60 at some point, but I'm not sure we'll have parity. Okay, let's see. We have another question from Fabian. If the ECB meeting minutes is not such a market moving, why isn't the market very important on the calendar? Well, US jobless claims marked moderately important. Well, first of all, every calendar maker has his considerations for what's important and what's not important. Okay, so and things do change all the time. Okay, my experience is that the meeting minutes are not important. Now it's the ECB. It's an opportunity for them to influence the euro, and they have a lot of impact on the euro. Okay. So we might have a surprise there. Like, I guess that's why it's marked as important. But in my opinion, according to my experience in the past few ECB releases, it didn't move markets at all. Okay, so any person, any analyst has his own perception of what's important and what's not. U.S. jobless claims, they're also moderately important. I think so because when it's around, let's say in this range of 260 to 280, what we had in recent months, it doesn't move markets so much. But we know that we can have surprises there. We had 255, we can have 284. These kind of negative or positive surprises do move markets. And it's also important with the economic indicators to look at the context. Okay, first of all, the publication time. So we have, this time we have jobless claims released on their own. We don't have any other figure at the same time. We have continuing claims, which is part of the same report. And only an hour and a half later, we have the Philly Fed indicator, which is important, but not critical. Okay, so today, jobless claims is more important than, let's say, last week. Last week, we had other figures released at the same time. Can't remember exactly, or 2 weeks ago. Anyway, hope you get my point. If we have retail sales published on Thursday, nobody's going to look at jobless claims. If we have CPI, the same. If we have GDP, we had this a few times. GDP releases on a Thursday, nobody's looking at jobless claims. Okay, but today it's a bit more important because it's the event of the day. What are awaiting GBP news today? Let's look at pound dollar. Well, regarding the pound, we have, of course, the retail sales. Currently, 152.82 on cable. In the middle of this high range, 152 to 153. If we have a positive figure, and we could certainly have that, I mean, it's easy to be positive today because expectations are negative or low. Then perhaps we'll have a break above 153 and towards 153.70. If we have a negative surprise, a big correction after last month's big jump, we could also have a downwards revision, of course. Then we could have correction back to this previous range of 151.60, let's say, to 152.50. Okay. More questions? Let's continue with, well, we talked about the yen. Yes, England. Indeed. Okay, we answered that. Let's look at the Canadian dollar. 132.60, also enjoying this post-Fed, post-minutes US dollar sell-off. Okay. Yesterday we challenged these highs. You want to see this as a lower high or double top, depends on your point of view, guys. But anyway, we can look at this level here. 133.70, and this is becoming important resistance for dollar CAD. We're currently in lower levels. Let's see if we can return above 132.80, currently between 132.40 and 132.80. GBP CAD, yeah, I'll talk about that. Just in the context of CAD, I'd like to speak about oil for a second. So what did we have yesterday before the release? First of all, in inventories, crude inventories, they came out not as crazy as in the previous weeks. We did have this small dip, this false break, if you wish, under $40 on WTI crude oil, West Texas Intermediate. And then we had the oil price getting back into range. Okay, but all in all, you can see that oil prices are pressured. There's still too much supply in markets. Okay, now let's answer question about pound CAD. This is choppy. Last time we talked about this currency pair, I think it was more interesting. Yeah, we have resistance here at 203, currently at 202.67. This is really forming. You can see support here at 202. Yeah. So we have support at 202. This line, I believe we can erase it. It's been shattered. Lines I put a few weeks ago. Also, it's a bit choppy, this pair. I think that 202 is strong support. Look how it separates ranges here. It's been resistance here on November 11th, and then since then it has become support. So this is, I see this is strong support. General trend for pound CAD is higher in my opinion because of rate hike in the United Kingdom and some weakness in Canada, weakness in oil prices. But of course, it's never a one-way street. In this case, it's a very choppy street. So further levels, let's move from the 30-minute chart to the hourly chart. Yeah, so on the top side, I still see 203 as resistance, but it's a bit tough there. 205.40 is the next resistance, and really strong resistance. It's 209.60 or 210 if you wish. On the downside, 202, 201.10. Then the round number of 2 is not really strong support, and it's followed by 199 and 198.20. Okay, so these are the levels I'm watching here. All in all, we had this range trading right here in late October, early November, a dip to lower ground. But all in all, we have here a higher low than the previous range, Now we're back to this range. Maybe we'll have a challenge to the upside if we have strong retail sales, for example. And tomorrow we have some Canadian figures, so that will have an impact as well. I hope this answers your question. So looking forward to more questions. Let's do just talk about a few more currency pairs on the list, on the sort of usual list. Had a question from Chris earlier on pound, on Aussie against the Aussie dollar against the US dollar. So we're seeing it now make an attempt out of this range. We had this range at 71.60, currently a bit above that. Further resistance at 72, 72.80. Support 70.65 holds very well and becomes even stronger. Work the support right here in late October. Now once again, we had relatively upbeat meeting minutes from the RBA early this week. We had a strong Australian jobs report last week. So all in all, I think that the Australian dollar certainly has stabilized. And if I talked in the past about the Aussie dollar being weaker in comparison to other commodity currencies because of China, the recent domestic figures from Australia made me change my mind for the time being, and it looks more stable. And the Kiwi, which depends more on milk prices, it's a bit more choppy. Again, we had positive PPI, but milk prices are falling. Another question from Fabian. Tomorrow, Draghi speaking in Frankfurt in front of bankers, HEMT. Exactly. That's right. Do you expect strong reactions from the market? Do you expect him this time to be not so dovish because of happy of current levels of the euro for this phase? Good question. First of all, I hope we get the content of his speech, because we didn't get it on Monday, and I didn't like that at all. Assuming we get the content of his speech, I believe he'll keep on talking dovish, talking about acting in December. Current levels 106.70. Yeah, it's lower than his previous speeches, lower than beforehand. But on one hand, Draghi needs to keep sort of weigh on the euro, keep it depressed. On the other hand, we've seen in January, and we've seen also on other occasions, that when the ECB acts, when Draghi acts, his personal drama, his personal style is to, he talks as much as he can to weigh down on the euro, to try to have impact on markets. At some point, and it works for him quite well. Yeah, he's quite a master in that, with the dramatic pauses and these sort of looks in the camera and whatever he does. Well, it's not only the verbal theater, it's also what he says, of course, and also the actions. But at some point, markets expect the ECB to act. And what we had in January is that we had towards the event all kinds of leaks. I believe they were, of course, very intentional. And we had talks about less QE, okay, around 500 to 750 billion total, and monthly buys of 40 to 50 billion. At the end, all these promises, if you wish, all these leaks, he topped them. So Draghi has a tendency to to under-promise and over-deliver. Okay, so he creates low expectations and then beats them. So at the end, we had not 40 to 50 billion, we had 60 billion per month, and not 500 to 750 billion total. We had 1.14 trillion. Okay, so I believe that on one hand he wants to keep the euro low and sort of prepare markets for action, but he also wants to over deliver in December. So regarding your question, I believe he'll refrain from any kind of numbers. We're just 2 weeks away, but he might hint, of course, say again that they're ready to act. The important point for me tomorrow is we had one of his colleagues, Peter Pratt, refer to the Paris attacks and say that it also poses downside risks because of all the security costs and, implications. But let's see if he says anything about that. Another colleague of his, Yves Mersch, said it's too early to know, which I think is, of course, makes sense. It's just fresh. If he also adds the Paris attacks to one of the downside risks, that'll be news for me. Like, yeah, and last week we had news from him saying that the strengthening in core inflation is weakening. No, the reality was that it wasn't weakening. Actually, core inflation did tick a bit up from the initial release of 1%. It rose to 1.1% in the final release for October. Anyway, he provided that small bit of news. This time the news could be around the Paris attacks. It could be around anything else. He can't surprise us. So I believe he will not weigh on the euro in terms of saying we're going to do this and that, cut the deposit rate by 0.5% and double QE or whatever. He's not gonna. He's gonna wait for the rate decision for breaking us the real news. And perhaps we'll have some kind of rumors or leaks before. But in his official speech, I believe he'll just give us more points of thought, more policy considerations. Okay, and hopefully we'll get. He'll talk about monetary policy, and hopefully we'll get the content of the speech because. And we didn't get that from Madrid on Monday. Okay, so this is a long answer. More questions. Let's look at more charts. In the meantime, euro dollar is sliding a bit more, sliding towards the lower end of the middle of the range. Let's be more correct. 106.70 almost, and lower support 106.30. Not that far away. All in all, we've come down 45 pips from the top. Yeah, the ranges could be better. We'll get more action today. Talked about the Aussie, talked about the Kiwi. Dollar Swiss, we reached higher levels yesterday above 102 because of the weaker euro and the stronger dollar before the Fed minutes, and then we had this trend reverse. Okay. Remember, the Swiss National Bank is intervening. That's why this is stable. Okay, this might look like an intervention here. Euro Swiss moving up to 108.68 at the moment. Reach this resistance line here, just around 109. All in all, beware of intervention here. Euro Pound, Euro Pound is an excellent currency pair, an excellent cross to see monetary policy divergence. In the Eurozone, we're expecting more monetary stimulus. And in the UK tightening, we had this fall under 70.20, which now turns into resistance. Very nice lines over there. You see the 70.20 level from late August. And the next line to watch is 69.40. Okay, a question about from Tilan. Good morning. What is going on with CHF Swiss franc? Do you expect coming days? Well, as I said, it moves according to the flute. Moves usually in tandem with the euro because of the intervention of the Swiss National Bank. So I expect Euro Swiss to trade more or less within the narrow range of, if we look at the widest possibilities, we have 107.60 to 110, but in reality it's much more narrow. It's within the 108 handle. And dollar Swiss, if we have good figures from the US, higher, depends on the euro a lot, euro dollar. So that's what's going on over there. Fabian says, thank you, Yohay. So if I understand correctly, euro will probably pushed even lower tomorrow. I believe he can push, Draghi can push the euro a bit down, but he won't give it a blow like in the rate decision. And yeah, I think he is smiling quietly as he sees a lower value of the euro, and he also sees his policies working, if you wish. For example, the Euribor is lower. We have next week some monetary data like money supply and private loans, and I believe that'll show another improvement. That proves to him, and the rise in core inflation also is sort of a proof that policy works, but probably they need more. It's not enough. I believe he'll push the euro just a bit lower, not something significant. We're just 2 weeks away from the rate decision, so that could be the big event. He'll want to keep the tension high, so there's also a chance you won't see anything new, and that will not push the euro lower. But in any case, I don't think he'll give a boost to the euro. I don't see. I see it either as neutral or bearish for the euro. This speech of Draghi tomorrow in Frankfurt, just as the show begins. Okay. More questions? Euro pound, we talked about that. Euro yen, choppy. Oh, pound yen, one of your favorites. Well, we talked about the chance of this line so many times. The September high of 188.10. We're above this level. We have some kind of a breakout. The high so far 188.80. Yeah, quite a nice breakout and exactly above the line. So far, 188.10 I mentioned really turns into support. So very nice technical behavior there on pound yen. That's a nice pair to watch. Next resistance line is only at 191. Let's see why I marked that line. Yeah, 191 was support back here in July. So that's the next line to watch. Or perhaps we'll add another one here, which was this kind of swing high at just under 190. Anyway, we have a nice break above this 188.10 level, and we have the pair settling above this level. And let's see if after this break we might fall below support. 188.10 now turns into support, or we'll have it continue on the way higher. If we fall 186.22, sorry, 186.30 is support. Okay, so 186.30, 188.20, 190, and 191 on pound yen. Euro pound bullish. No, I see it as bearish because of monetary policy divergence. And I think we have a nice trend here. It's never a one-way street. If we have a weak retail sales report today in the UK, then we could see it rise back up. Resistance that I see here is 70.20. Okay, not the round number of 70. And on the downside, 69.40. In general, my bias is bullish US dollar, pound, bearish euro and yen among the majors. Okay, but of course I may be right, I may be wrong, and it's never a one-way street. Okay, more questions? Another currency pair you wish to examine? Let's take another look at euro dollar, hugging the 106.70, not going anywhere fast. Today the euro dollar depends more on US events than on European events, and tomorrow perhaps it'll depend on Draghi. Okay, as I speak, it's ticking down just a few. No, not going anywhere fast. Let's do a recap of this week's events. Monday, we had Japanese GDP showing a recession in Japan, not unexpected, but a bit worse than expected. No impact from the Bank of Japan. Draghi spoke and didn't say anything. Tuesday, we had inflation data in the UK come marginally above expectations. Core inflation came out a bit stronger and that supported the pound. It looks better than what we had before from the Bank of England. Inflation data in the US came out as expected in the most important figure. Core inflation year over year 1.9. New Zealand milk prices fell. It weighed on the kiwi. The kiwi reached new lows. Now it already has recovered. Yesterday we had the Fed meeting minutes. We talked about that early in the show, and we'll mention it in the wrap-up. Rate decision in Japan, nothing. And tomorrow, Mario Draghi, maybe he'll make a grand finale for the week. Okay. On euro pound, I'm bearish. I see weaker euro, stronger pound. Okay, not bullish. Okay, and regarding Aussie against the Swiss franc, I think it's the first time we have a question about that. Let's see what we're saying there. 73, quite a nice uptrend, isn't it? Okay. In theory, this should be more or less a mirror of Euro Aussie because of the intervention of the Swiss National Bank in the Euro Swiss. Let's put some levels here and let's see what we have in terms of technicals. Quite a nice set of stepping stones on the way up. I think there's more potential to the upside because in Australia things are looking better than in the Eurozone. We're expecting easing in the Eurozone in 2 weeks' time, but in Australia things have stabilized. China looks relatively stable. Let's see, currently we're on high ground. It's quite messy. So first of all, 72.40 looks like a significant support because that was the line that we had here in August. Okay, on the downside, sort of weaker line 71.60, 70.52, 70.50, this round 70 number, and of course much lower 67.50. That's already stronger, but it's quite choppy, this pair, I must say. Let's widen out a bit. Oh, we're reaching strong resistance here. That's already more interesting on the charts. Yeah, just around 73. It's actually where we are now. So Aussie Swiss is reaching resistance. It was resistance right here in August, and we had this attempt here in June and several other attempts. So yeah, this is quite an important line. Widening out even more, we have 74.80 and 76.70 just before this line here, 77.50. So yeah, it's more choppy on the downside, more interesting on the upside, because we're just at resistance and the next resistance lines are easier to point out. Okay, so in technical terms, it's an interesting cross. Remember, the Swiss National Bank is intervening. I said this, I think, today for the 5th time. But in any case, the dependency of the franc on the euro means weaker franc, and the Australian dollar looks better at the moment. Another question from Fabian: the consensus for US jobless claims 271,000, previous 276. As you said, no news is not so bad news, right? Even good news for the US dollar. But what is considered a good figure to make the USD move substantially today? Well, I'm glad you asked that because I have an easy answer for that. Under 260, that's the level. Okay, why? Let's look at the. First of all, these are levels last seen in 1973, if I'm not mistaken. The lowest we've seen so far is 255. Right here. So if you look at this chart, yeah, of course, under 255 even will be really excellent news. Touched here and here if you want support line on the jobless claims chart. But I think 260 will be good enough. Okay, if it'll be, the range has been 260, 280, and that will not be huge news. Under 260 will be a substantial move, I believe. Under 255, if you have headlines like the lowest level since 1973, then you know it's good news. But yeah, it's a weekly figure, so it can be a bit noisy. When I say substantial move, it's not the same level of substantial moves that we have from CPI, retail sales, GDP, and of course non-farm payrolls, but still more significant. Let's put it this way. Okay. Okay, guys, it's time to wrap up. So this is the wrap up for the live market open, Thursday, November 19th. We had the Fed meeting minutes saying basically what we already knew. The Fed wanted to send us a signal about a rate hike in December. Not all members agreed on that, but most did. They are considering it. It's not a done deal, but it's certainly on the cards. We had some stronger dollar before that because of some Fed officials talking about the liftoff. And then we had the Fed meetings not providing anything even more bullish. This provided an opportunity for some profit taking across the board, weaker US dollar. But since then, that trend has reversed. Excellent example here is euro dollar. We had it fall to new lows of 106.16 just to bounce back up all the way to 107.20 and now fall back down to the middle of the range, 106.75. Pound dollar did more of the same, but the pound is in a much better situation than the euro. Pound is getting ready for the retail sales release just after the show and looking at higher ground, 152.70 at the moment, 152.50, 153, 153.70 on the upside, 151.60 on the downside. Pound is looking good in general. Dollar yen remaining on high ground. Yesterday it made this false break exactly like the euro to 123.75 and then back to the higher range. 122 is low support, 123.60 remains resistance. Dollar CAD, Canadian dollar made some kind of a comeback yesterday after oil prices dipped all the way to just below $40 a barrel in WTI with the Fed minutes and some improvement in inventories. We had better oil, better Canadian dollar, 132.54, 132.40, 132.80, and 133.70 are lines to watch. Aussie dollar, sorry, chip chopping with this resistance line at 71.60, 72 and 72.80 are further resistance line. 70.65 is strong support, strengthening. Okay, Kiwi dollar, we received good news from New Zealand PPI that enabled the Kiwi to recover from the abyss, from the lows. It suffered the initial dollar strength before the meeting minutes and the weak milk prices, but now after good PPI data and the sell-off of the US dollar, it's back to the previous range, 65 to 65.70. Okay, so these are the levels, currency pairs I'm watching today. We have a much busier day in terms of indicators. Retail sales in the UK expected to show a drop after a huge jump last time. Low expectations could result in a positive surprise. ECB meeting minutes at 12:30. These are very stale and usually very bland. My expectations are low, but who knows? It's from a meeting 4 weeks ago. US jobless claims, the weekly barometer of US jobs, expected to fall to 271 within the range. Philly Fed Manufacturing Index, expectations are low, and for a good reason. Manufacturing has been the weaker link. We need, let's say, if jobless claims and the Philly Fed Manufacturing Index both go in the same direction, we could have a more substantial impact, of course, than if one beats and the other misses. Lockhart speaks at 5:30. He's I would say, a hawk. And the number, and more importantly, Stanley Fisher, number 2 at the Fed, the vice chair, speaks at 9:45. And let's see if he makes a bigger commitment to a December rate hike or not. We're 4 weeks away from that. And tomorrow, just as the show begins, we have a speech from Mario Draghi. Let's hope we get the content of the speech first, monetary policy, and in addition, and let's see if he's dovish, if he weighs down on the euro or not. Nothing is certain. So that's it for today. Thank you very much, everybody, for coming to the show. As always, thank you very much for all your questions. I appreciate it a lot. And wish everybody a safe and successful trading day, and see you all tomorrow. Goodbye.